If you're married and you formed an LLC with your spouse, you might have accidentally signed up for extra tax homework you didn't even know exists. Surprise? Well, you thought you bought liability protection, but you also bought a whole extra tax return. Let me explain. Hey, I'm Sammy. I'm a CPA and fractional CFO. We offer fractional CFO services for small clients. And let me say that super simple. If an LLC has two owners, the IRS usually treats it like a two-person business. And that usually means to file a partnership return. That's Form 1065. Well, even if you just you and your spouse, even if you share the bank account, and even if you say, hey, it's all our money anyway, the IRS doesn't care. The two owners is two owners. Now, before you panic, let me calm you down. Filing a partnership return is not the worst thing. Sometimes it's actually cleaner because it forces you to track money like a real business. And it creates two K1s, one for each spouse, and you plug into your personal tax return, so it's super simple and clean. And in my experience, a small partnership return that's clean and boring can get less random heat than a messy 1040 where everything is shoved together if you get into a random audit. Is that a guarantee? No, of course not. Nothing is, audit proof, but I want you to stop you acting like 1065 is the monster hiding under your bed. Let me give you a real story. I met with a couple of clients last week. Let's call them, Mike and Linda. So Mike runs a small construction company, and Linda helps with the books. They both bought a rental house for extra cash flow. It's a great investment, and the rent was about $2,800 a month. So that's $33,600 a year. That's the gross rent. The expenses look like this. They had about $9,000 repairs and maintenance, $6,500 property tax and insurance, $4,000 mortgage interest, and some other little stuff. So the net profit was around $10,000 for the year. They did what a lot of smart people do. They said, hey, we want protection. So they formed an LLC. Both names are on it, 50-50. So it felt fair and clean. Now, this year they came to me like, hey, why our tax prep bill is higher than last year? Well, last year we just reported the rental. This year, you're telling us that we need another whole return? Yep, because that LLC changed the whole game. A two-member LLC usually means a partnership return, Form 1065. Two K1s, more steps, more accounting, and if you DIY it yourself, well, more chances to mess it up, I think. So they looked at me as if I, personally invented that Form 1065 just to ruin their Friday night. And here is where couples get confused. They say, hey, but we're married. Can we just file it on our personal return and call it a day? Sometimes you can, actually. Sometimes you can't. So it all depends on how you set it up and where you live. Let me explain. Well, here are the big ideas. Let me give you the simple version. One, we're just co-owners. That's what a lot of people say. Well, if two people own property together and they basically just splitting income and expenses, there are situations where it says pretty simple. But once you put that property inside a multi-member LLC, you usually, telling the IRS, hey, this is its own entity. And that pushes you towards partnership rules. Second, I've heard about husband and wife shortcut. I don't know what does that mean, but I hear that from some clients. And people usually hear stuff like that, qualified, joint venture, and they get excited as if like it's a cheat code. No one knows about it. But that shortcut generally doesn't work when you are running it through an LLC. So don't count on that. Three, community property states. So if you live in a community property like California, a husband and wife LLC, sometimes it can be treated as one owner for federal tax purposes. That can mean a similar filing approach, but it's not automatic. So it depends on the state rules and how you own it. This is where people assume. They get surprised later if they don't know the rules. Here's how I make that easy for our clients. So I ask them 3 questions. Question number 1, what state are you in? If it's a community property state, you might have options. If it's not, assume partnership return unless your CPA tells you otherwise. Question number 2, who's actually listed as the owner of the LLC? Because a lot of couples create a partnership filing requirement just because they put both names on the LLC to keep it even. Question number 3, is the extra filing worth the protection and the clean setup? Because I'm not anti-LLC, I'm an anti-surprise. Back to, Mike and Linda's story. So they weren't too mad about the partnership return. They were mad because nobody warned them it was coming. They thought they were doing a simple rental thing, and boom, that's another return becomes due. So what we did the right thing. We looked at their state, we looked at the ownership, and we looked at what the LLC owns. And we picked the cleanest setup going forward, so they were not paying for complexity they didn't need. And I'll say it one more time. A partnership return, it's not the end of the world. If it's set up clean and your books are clean, it can actually be smoother than mixing everything into your personal return and hoping that it makes sense later. If you're married and you already have a husband and wife LLC, don't panic, just get clarity. And if you're about to form one, don't do it based on a random post online. That one small decision, putting both spouses as owners, can change your filing requirement for years. So if you need help with this, that's what we do. We do fractional CFO work for our clients, support them, with business tax clients, support all year long. And we keep it simple. We keep it clean. And we make sure that you're not doing extra work for no reason. Send me your state and who owns the LLC and what the LLC owns. I'll tell you straight if you are looking at a partnership return and whether that's a problem or actually totally fine. So I just want to thank you for spending time with me here, and I look forward to seeing you in the next episode. Thank you very much.
This has been another episode of our tax-saving video series. If you enjoyed this video, please like it, subscribe below, and share with other business owners. You can find previous episodes and more information at www.bostacpa.com. Thanks for listening, and have a great day.